Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizely, financial wellness speaker, personal finance educator, and creator of the Me Money Method. This is the show for people who feel behind financially and want to finally understand money and make confident decisions that work in their real life. Because money isn't just math, it's life. And you deserve to feel confident with money and good about how you spend it. Hello, everyone. If you're listening, you're one of the real ones, the ones who understand that every financial decision deserves to be explored before walking away from value. Many seniors own life insurance policies that no longer serve their original purpose. Children are grown, estates have shifted, premiums are rising, policies are underperforming. Most people assume their only options are to keep paying or surrender for cash value. In this episode, we're going to explore a lesser known option, life settlements, and help listeners understand what they are, when they can apply, and how to evaluate them responsibly. My guest today is Mark Mrky. He's a managing partner with Life Insurance Settlements, Inc., LIS. He's been with them for 25 years, and their sole focus is representing their clients who wish to liquidate a life insurance policy they own in the secondary market. Welcome, Mark.
Thank you, Linda. Much appreciated and happy to be here to talk a little bit about my industry, life settlements.
Great. I usually start off with asking people how they got where they are, but first, tell us what life settlements are, because our listeners might not know.
Sure. It's an overlooked option, and that's really all a life settlement is. It's an option. And what do I mean by that? Well, your life insurance is an asset. It's an asset that most people take out, and that asset pays off upon death. Well, that has changed over the last 25 to 30 years in that you now have a secondary market for your life insurance policy. What does that mean? Well, it means that there's institutional funds, accredited investment groups that will say, hey, based on someone's mortality and based on someone's premiums going forward of their asset, their life insurance policy, we can buy that policy back from them. And that's what's known as a life settlement. You're simply taking the ownership of your policy, and instead of it being in your name, your beneficiary's name, your trust, corporation, whoever owns your policy, you're now saying, well, if I no longer have a need for it, instead of just surrendering it back to the carrier, what's my other option? Well, the other option is a life settlement. And all you're doing is simply saying, okay, for a cash payout, I'm going to change the ownership. I'm going to sell it to a third party. That's a life settlement.
Very interesting niche. So tell us, how did you find this industry? What got you here?
Sure. I've kind of had my eye on it for quite a while. My partners have been in this space since the viatical settlement days, which that name kind of brings up different notions with people. But back in the 90s, the industry was called viatical settlements. And what was taking place then is that people that were afflicted with HIV and AIDS were selling their policies. And that was termed a viatical settlement, which a viatical settlement is nothing more as if you sell your policy and you have a life expectancy under 24 months, it's coined a viatical settlement. Well, all of a sudden, the advent of medical sciences, protease inhibitors, things that said, wait a second, if you're living with HIV and AIDS, you now can live longer than 2 years. Some of those medical advances came out, and you had some really sharp, we'll call it bankers, institutions that said, well, hey, if we can do that for clients with very shortened life expectancies, why can't we do it for seniors? Why can't we do it for folks that are 65 and older that own life insurance and maybe they want to sell their policy? So really around, I'll call it 2000. I got in this industry in 2001. Again, my partners ran one of the largest viatical settlement shops. The industry made a shift to life settlement, which again was seniors now selling their policies. And in 2001, I came to Florida. I was living in Denver, Colorado, different business, different times. Took a look at this industry and said, yeah, I think there's some validity to the industry. I think it's a good industry for someone to be able to take this option, again, this asset that they own, their life insurance, and we're just giving them another option besides what the carrier's telling them. The carrier's saying, hey, your surrender value is X. Well, now you have this secondary market that says, well, maybe we'll buy your policy and we'll give you 2 or 3 or 4 or 5 or 6 times the carrier's surrender value. So in 2001, I came to Florida. I joined LIS, Life Insurance Settlements. We are a life settlement broker. And boy, 25 years later, I'm still here. So I'm still here. And
Wow.
the industry, it's been a wild ride. When I first started, this industry was kind of the wild west. There was no regulation. It was very ill-conceived to sell your policy. Wow, what's that about? I have to be on my deathbed. No, you don't. You don't have to be on your deathbed, and we'll get more into that. But fast forward to where we're at now, and boy, the regulation has greatly changed. It's changed for the better. It's changed for the consumer, and our industry has grown up. And I like the spot we're in now, and I think our industry is going to continue to advance so that consumers have this option. Again, that's all it is. It's an option. If you own life insurance, you have this chance to either surrender to the carrier, or here's this institution that says, well, I'll give you more money than the carrier. So yeah, like I said, 25 years later, I'm still here.
Yeah. Wow. 25 years. So I got my health and life insurance license in 2019.
Mhm.
And so through that, I learned about health and life insurance and viatical settlements, but I never learned about this.
Uh-huh.
This was not part of what I learned. So if it's not known to people who are in the life insurance industry and in the financial services industry, it's got to be very unknown to consumers generally.
Yeah, it's just lack of education. My industry is only 25 to 30 years old. The life insurance industry's been around for a lot longer, 100 plus years. It's frustrating to me. There's over 500,000 life insurance policies that end up in lapse or surrender every single year just on seniors. And again, that's my marketplace, 65 and older. The same reason that you take out life insurance exists for why you may want to sell it. You take it out because you want to cover your kids when they're younger. Well, now your kids are growing up. Maybe they're saying, Mom and Dad, we don't need that life insurance. We'd love to have it, but go ahead. You're in your 60s, in your 70s, your 80s. Your finances aren't the same as that they were when you're in your 40s and 50s. Go ahead and get rid of it. Well, we now have an option to let them get rid of it if they choose. But clients are just not informed about this option as often as they should. I think financial advisors, broker dealers are the biggest community that are missing this option because they have the opportunity to sit down with their client, even if they did not sell their client life insurance. They say, hey, is your life insurance meeting your needs? Oh, well, if it's not, let me tell you about something. It's called a life settlement. Yes, you can sell it to a third party. That's a great way to increase assets. If the client was going to surrender it, say for 50 grand, and along comes a life settlement company that says, well, I'll buy it for 250 grand. You get to sit down with your client and say, hey, let's move this into a different financial avenue, whether that's an annuity, whether that's your brokerage account, whatever it is. But we still have a huge lack of education in my industry. I hope it gets better every single year. I hope we get buy-in from all the insurance carriers, the broker dealers, the financial community, because my industry only buys about 3,000 policies a year. There's a disconnect. 500,000 end up in lapse or surrender, yet we only buy 3,000. Now, can we buy all 500,000? No. Some of them are too small. Some of them are different policies that just can't be sold. But there is a huge disconnect that with further education through groups like me and you, turning on the television, whatever it is, Lisa, Life Insurance Settlement Association, great resource for anyone who wants to look into this industry. Become educated. It's not hard to become educated, so you can simply give this option to your client.
Makes sense. Okay. So you mentioned a few things that are qualifiers, like age, the size of it. You said some are too small. You mentioned types. So tell us what does qualify. How would we know if we had a policy that qualified?
Sure. 65 and older. That's the cutoff. All the buyers in the industry, again, as a life settlement broker, I represent all the buyers that exist, and there's a few dozen. 65 is the cutoff. And then the type of policy is a universal life or a convertible term. That's 90% of my marketplace. Whole life, not so much. Great policy, typically performs, has high cash surrender values. Premiums get a little more expensive. My buyers don't want to see that. So really you're looking at any of your clients that are 65 and older, own any type of universal life, whether that's an IUL, VUL, GUL, or a convertible term. That always shocks people. Like, what? How do I sell a term policy? The key with the term, it has to still be in its conversion period, which typically is when your client's going to enter into their late 60s or maybe very early 70s if they own a 15, 20, or 30-year term. That's important. So now with your clients, again, whether you wrote the policy or not does not matter. But if your client owns term, look at them and say, hey, you're probably not going to convert it. That's a fact. 98% of term policies do not get converted. But if a buyer can look at that policy and say, yes, we'll convert it, we'll become the owner, we'll give the client some money for it, it's a great option to pitch to your client that that term policy that has zero value we can potentially buy it in a life settlement. But most of the policies, again, they're 65 and older. The older the client and the less healthier, the larger my offers get. There's two main drivers in a life settlement offer. It's how long is the client going to live? And yes, I know that's morbid, and we'll kind of get more into that. And then how much is the policy? What are the premiums going forward? So again, 65 and older, universal life, convertible term. That's my marketplace.
Great. Thanks for clarifying that. So let's talk about what you said about health.
Sure.
And how that plays into it.
Yeah, the older the client or the less healthy, the larger your offer, because mortality is one of the key drivers. So if I'm a life settlement buyer, what I do is we collect your medical records. As a broker, I collect medical records. I distribute them through a HIPAA authorization. I have to follow regulations, guidelines to all of my buyers. Each buyer is going to assess a life expectancy. Well, if your life expectancy is on the lower end, 1 or 2 or 3 or 4 or 5 years, and the premiums, whatever they may be, that's a lesser hold, if you want to call it, for that life settlement buyer. So their offers are going to be larger. Most life settlement transactions have a life expectancy or a mortality somewhere between 2 and 18 to 20 years at the most. So again, the older you are or the less healthy you are, the larger your settlement offer is going to be. And I think one misconception that I see, especially in the early days, people said, oh, if I want to do a life settlement, I have to be on my deathbed. No, we're putting transactions together every day on folks that are in their late 60s, maybe with some health issues, or their 70s or 80s that are perfectly healthy. Again, it's just based on mortality. Standard mortality these days for a healthy female is age 96, male about 93 in my industry, the life settlement industry. So again, we do look for older insureds or insureds that have some health ailments that they've simply said, well, I don't need the insurance anymore. Maybe I can use that money to help me with medical costs.
Yeah, and that's a good thing to point out, because sometimes you have money in a life insurance policy, but you haven't passed away yet, but you have all kinds of medical bills. So
Sure.
That would be a good reason for someone to look at a strategy like this.
Yep. Mm-hmm. Yeah, there's various, like I said earlier, the reason people buy insurance exists for why they sell it. They took it out. They want to cover their kids, their business, their spouse. Well, maybe they got divorced. Maybe you don't have to have insurance. Maybe they sold their business. Maybe they don't need insurance. They had a key man policy, or they just got to an age in their life where their life insurance is no longer meeting their needs. Maybe it's becoming unaffordable. Premiums have gone up. Cash surrender values have gone down. That's what we see most often with universal life policies. And now they have this option to have it appraised in what's known as a settlement.
Let's talk a minute about universal life policies and IULs, because I feel like there's two extreme opinions on them. One is that they're this great thing, they're this great investment, blah, blah, blah. And the other one is that never do it because it's going to underperform and it's not going to do what it says it does. And they're inflating the illustrations, whatever.
Internal rate of return.
Yeah. So I feel like there's two opinions and they're very extreme. So tell us more what you know about that.
I'm not going to get in a shouting match with insurance agents and financial advisors. I think IUL is a tricky product. If you pay your premiums on time and you fund the policy as you should, maybe it will perform at your 6, 8. I've seen some of these projections at 12%. I'm sorry, I have not seen an insurance policy perform at 12%. Most of them, and again, I don't want to get in a battle with some very smart financial advisors who sell IUL. That's okay. It has a death benefit concept and it has a cash value concept. I get it. But what we see in my industry is all too often these clients took the policy out. Maybe they missed premium payments. They let the policy ride for a year or two without making premiums, and the performance of the policy started to go downhill. What do I mean by that? It means instead of them getting a 6 or 8% return on their money, they're facing a 2% return. They're facing a negative return. I see that every day. I see it, whether it's VUL, IUL, standard UL. I see those all day where someone has pumped in hundreds of thousands and their cash surrender value is 0. Well, that just didn't work out for the client. Still gave them a death benefit concept. That's okay. But if the policy didn't perform at some nominal rate of return, cost of insurance may have gone up, which happens on policies every single day. Last year alone, I think we had, don't quote me, I want to say it was 16 different life insurance carriers raised the cost of insurance on their policy. What does that mean? Well, if you took the policy out when you're, say, 45 years old and your premium was $30,000, fast forward to when you're in your 70s, that premium is no longer $30,000. It's $40,000, it's $50,000, it's $60,000. Well, the cost of insurance went up. Did your policy perform while that cost of insurance went up? Maybe, maybe not. But again, my industry, most of what we see is policies that did not perform, whether that illustration was conveyed accurately or not. If I'm someone that's taking out a new policy, I probably have that advisor run it at a 4 or 6% return and fast forward that 5, 10, 15, 20 years, see what those returns look like, and then decide, is that a policy appropriate for you? IUL is the flavor of the decade, I think, right now. And again, I sit back on the sidelines and I look at these policies. And for the ones that didn't perform, were an option. And for ones that did, good for you. You have life insurance and it performed to some type of nominal return for you. So hopefully
Great.
that answers your question on IUL.
It does, because I think it's intriguing that if you do have an IUL that's underperformed, that a life settlement could still be an option for you with that policy.
100%. And I say this all the time, a life settlement, and I hope this is where your viewers will listen, a life settlement will give you the most comprehensive view of why it makes sense to sell your policy or perhaps not. What do I mean by that? Well, here's what a settlement evaluation does. We do collect medical records. We do assess mortality, life expectancy. I know it's morbid, but guess what? When I deliver my offer to you, I'm also delivering you a general estimate of life expectancy. So now you can sit down and go, okay, well, the life settlement guys say I have 10 years to live. Here's what 10 years of premiums look like if I want to keep the policy. That's fine. Here's the life settlement offer over here, which is above and beyond my cash surrender value. So really, if you're selling your policy, this is a great way for you and your family to sit down and go, okay, here's the carrier's cash surrender value. Here's the life settlement offer over and above. Oh, it was based on the mortality of 5 or 10 or 15 or 20 years, whatever it is. And not every settlement can we give an offer. Sometimes we have clients with life expectancies that exceed 18 or 20 years. We can't make offers. The buyers can't, but other times they can. But I always want to share as much information as I can with my seller so they make an informed decision, because when you do sell your policy, you're not a candidate for new insurance. There used to be that arbitrage that existed in my industry way back when I started. You could literally sell a policy and go buy a new one. That fueled my industry. We didn't create that. Some smart insurance agents did that. Now, if you sell your policy, you probably can't go out and get new insurance. So make sure that you're sitting down with your advisor, your family, your beneficiaries, and saying, okay, if we sell our policy for this amount over above the cash, we're not getting new insurance. So do we absolutely need this policy or not?
Very interesting.
Yeah.
If somebody's thinking about this idea and doing a life insurance settlement, what can they expect to be the difference between the surrender value they would get on their policy and the settlement value?
Good question. Data that I have from 2024, this year's data will come out soon, I hope, but 2024, the Life Insurance Settlement Association puts out data on when you sold your policy. What did you get? 2024 data showed that the average life settlement seller of a policy got 6.5 times the cash surrender value. What does that mean? Well, if you own $1 million policy and your cash surrender value was, say, 50 grand, the life settlement offer was 6.5 times that. That's pretty astounding if you think about it. Now, is every life settlement offer 6 times the cash surrender value? No. There's some cases I can only beat cash surrender value by a few thousand. Sometimes it's 100,000. Sometimes who knows what it is. Every settlement deal is different. But again, data from 2024 was pretty powerful. When you entered into a settlement, on average, you got 6 times, 6.5 your carrier's cash surrender value. So if you're seeing that IUL, VUL, GUL, whatever it is, and your cash surrender values are low, and you're sitting there thinking, boy, is this thing working out for me? Do I need my insurance? Go have it appraised in a settlement. It costs you nothing. The offer may come back outstanding and you decide to sell, and it may not come back outstanding. You may say, hey, let's just hold on to it for a little while.
So earlier we talked about the size of the policy being something that was a qualifier. Are we talking about the size of the surrender value or the size of the
death benefit?
Death benefit, yeah.
Good question. I'm glad you brought that up. Yeah, the minimum face value that the buyers, which are called providers in my industry, will look at as $100,000. I think the average settlement we see is somewhere in the neighborhood of $500,000 to $1 million, but the minimum is $100,000.
Okay, and how does the bidding process work? You said you work with different brokers, or
Yep. I'm a broker. A broker like myself puts all of the buyers in the same room. Put it this way. If you're selling your house, that asset that you own, and you put the for sale sign out in your front yard, you close the door, and 30 days later, you open the door and there's 12 people standing on your front lawn. You have 2 options. let the bidding process play out between all 12 of them, or you could look at one of them and say, what's your bid? Well, as a broker, I put all of the buyers in the same room. I do let a bidding process take shape. The buyers that you see direct on television, they're trying to buy it for their best interest. That's just business. They don't have to compete against themselves. So they'll give a client a bid and say, hey, that's our bid, Mr. Client. A broker puts all the buyers in the same room. You let this bidding process take shape. And I see it every single day. The buyers start off at one number, and then you have one remaining buyer with the high offer. And as a broker, that's the high offer I deliver to my client. And there is a lot of transparency, a lot of regulation in my industry. When I go to contract, you'll see in the contract, oh, look, 8 different buyers bid on my policy. It started out at 50 grand. It ended up at 250. And here was the high offer. So that's kind of the bid process. And each buyer, their underwriting processes are different. Kind of like when you take out new insurance, you're given a rating. You're given preferred, you're given standard. Some you're given a high rating, which the higher your rating, the more expensive your premiums are. Same thing exists in the life settlement industry. Each buyer will assess with mortality, a life expectancy. Well, one buyer might see your life expectancy at 10 years. One might see it at 12. Another buyer might see it at 8. Well, probably the group with the lowest life expectancy rating and the lowest internal rate of return that they build in for the purchase is going to win that bid. So as a broker, and again, there's very good brokers out there. If you're going to sell your policy, please get in touch with one. We're going to simply put all the buyers in the same room, and that's it. And we're going to have one goal. Wait till there's one remaining buyer, and that's the offer we're going to hand off to our client.
Great. Tell us more about regulation, disclosures, compensation, all those things that kind of happen behind the scenes.
Sure. The fun stuff, regulation. The good news, when I got in this industry, there was none. I think I mentioned it was the wild, wild west. Not good. Not good for our industry. You had people taking too much in commissions. Luckily, my partner, Rob Haney, sits on the Life Insurance Settlement Association board. That's the first thing we said, hey, if this industry is going to be taken seriously, we got to have regulation. So we pushed for it. We actually pushed for regulation in our own industry. And now we have it. We have 45 states that currently regulate life settlements. That means as a life settlement broker, I have to have licensure in the state I do business in. The buyers that I go to in each individual state also have to have a licensure in that particular state. There is transparency in the bid process. I mentioned that before. If state of Florida, we have 16 licensed buyers. Honestly, not all of them have money, but 16 of them are licensed. So when I get a case in, it goes to all those buyers. You let a bid process take place. And then once the high offer is achieved, you show that to your client. And again, in the contract, in some states, it shows every single buyer. It shows their bid. So that's the regulation. Is we adopted the NAIC Model Act many years ago. So we kind of have to follow some pretty strict regulations regarding the buyers we send to, regarding our commissions, which you can take in any life settlement transaction. The full commission between the advisor and myself can take up to 33% of the offer or up to 8 points of the policy's death benefit. It's the lesser of the two. Now, do I see that commission taking place on every single transaction? Absolutely not. Those are really high numbers. Most of the time, it's a negotiation between the client. Client had a 50 grand cash surrender value. I came to the table with 250 grand. I tell the client, hey, my brokerage fee is X. Maybe it's 10 to 15% of the offer. If you were represented by the advisor, he or she can also take up to, again, 33%. But in general, I see commissions falling somewhere around 20% range, or a 4 point of policy death benefit range. Again, it's a negotiation between the seller and the broker and the advisor too. And again, it's put in front of the client at the contract time. And you'll see very clearly that, look, the offer was 250 grand. The broker took, let's say 10 or 15%. The advisor took 10%. The client says, fair, I'll sign this contract.
Makes sense. I mean, if you're hiring a service to get you more than you would normally get, it would make sense that you would pay that service to do that.
Similar to the real estate model, 6 points when you sell your house, similar to an attorney fee, 30% of what they get you. So our industry is no different. But again, I got to believe we're more heavily regulated. We have to put it all on the table in front of the client, and they have to agree to it.
Yeah. Okay, we talked earlier about what qualifies and when maybe it would be a good idea to think about it, but when is it not a good fit to look at a life settlement?
Sure. If you need your insurance. If you need your insurance, if you can afford your insurance, keep it. Absolutely. I never have an argument with that. And that's the first thing I tell clients, that if you're going to enter into a life settlement and you sell your policy, you're not going to be a good fit to go out and get new insurance. There's a reason that the life settlement buyer wants to buy it. Probably means you have a short mortality or you're older. So if you're needing your insurance, you want it in place for your beneficiaries, your business, your spouse, whatever it is, keep it. Absolutely keep it. But if you're one of those 500,000 people that every year say, well, I don't know that I need my insurance, why shouldn't you look into a settlement? Again, it's a free, non-binding appraisal of this asset. You're either going to like the appraisal value or not. And then it's up to you.
Yeah. Okay, so let's talk about some ethical, emotional considerations that people might have. And I think that there's some cases where people would just feel uncomfortable about this whole idea. Like they might think it's betting on someone's death, or they're uncomfortable with the idea of somebody profiting from a policy. So how do you address those sorts of things?
Sure. My industry, I won't call it morbid, but that's the term that comes often so much. But if you look at it this way, the life insurance carrier bet on you when you took your policy out years ago. They have some actuaries that said, all right, this person's probably going to live this long. Life insurance policies are sometimes lapse-based priced. I say that very conservatively and softly, but the life insurance carriers are very smart. They know that once you get into your 60s or 70s or 80s, there's a very good chance, 80% or more is the actual number, 85% of universal life, 88% of term, never pay a death benefit. The life insurance industry is betting on that. They're betting that you're going to keep your life insurance to a certain period in your life and you're going to let it go. There's nothing wrong with that. Now you have this industry that says, well, hold on. If you own this asset, your life insurance, why shouldn't you be able to sell it like you can any other asset? Your stocks, your bonds, your house. Why shouldn't you be able to see the secondary market that is made up of institutional funds? I've mentioned two of the largest buyers out there. One of them is the first publicly held company to appear on the stock exchange. Awesome, outstanding news for our industry. There's some very good buyers out there that simply are going to buy your policy. They're going to put it into a portfolio, and that portfolio pays a return over time as they have maturities, deaths. Is it morbid? Is it odd to talk about? Yeah, but if the life insurance carrier or an annuity company that you took your annuity out with that's kind of betting on when you're going to die, if they can do it, why shouldn't a third party be able to come in and say, okay, well, we're going to assess your life expectancy, the cost of your premiums going forward, and we're going to hand over a number to you for you to consider. Again, you don't have to enter into the transaction. Once the offer is handed over to you or your advisor, you sit down and decide, is it in your best interest to sell the policy for an amount that's over the cash value? And that's up to you.
Yeah. So when you're selling life insurance in the beginning, like back when they originally bought these policies, it's a hard conversation because you have younger people and you're talking about death. And it's really hard for them just to talk about it to begin with. So there's all this mindset stuff that goes into selling the policy initially. But I feel like there's probably a whole different feeling and mindset that comes when they're coming to you and talking about this. What do you see as the challenges or the emotions or feelings that are coming up when they're having this conversation?
Sure. It's an emotional decision. You look at life insurance, it was designed for a purpose. But when that purpose, and I've said it over and over, when that purpose no longer exists, it is emotional. You're saying, boy, mom and dad took out insurance. It was for us kids, or I took out insurance for my business. I'm selling my business. That's an emotional thing. But again, why shouldn't you be allowed to take this life insurance policy and sit down and make a comprehensive decision? And again, that comprehensive decision is based on a few factors: the cost of the policy, your mortality going forward. And now you can simply say, okay, well, I took life insurance out 5, 10, 15, 20 years ago. The need for that life insurance coverage may no longer exist. Do I have an option? And we're just one of those options. You can reduce the death benefit, you can adjust your premiums, or you now can sell it. So it is an emotional decision. I see, cases where clients have come to us with very serious illnesses, and those are tough, tough times. I've dealt with many clients one-on-one that are afflicted with ALS or afflicted with other illnesses that have very short life expectancies, and they're looking for the life insurance to pay their medical costs. And then I just simply have other scenarios where mom and dad are in their 70s and 80s, and the kids are saying, Mom, Dad, we're fine. Get rid of that life insurance policy that you're pumping 30 grand into a year. It hasn't really performed. It doesn't look like your cash surrender values are down here. We got the cost of insurance is going up here. So again, it's just an option, but it's an emotional decision. But I think when you present the facts to the clients like we do in a settlement transaction, they're able to just sit back and go, all right, is this the right decision for us? And that's it. That's it. But most of our clients, when they come to us, they've made the decision. Usually they said, hey, this life insurance is too costly. It hasn't worked out as far as the cash surrender values, or we just don't need it. We're in our 70s and 80s. We don't need it. And they go, okay, hey, someone told me about a life settlement. Let's look into it.
So if someone is over age 65, they have life insurance and they've decided, I don't need the life insurance, the death benefit anymore. Mm-hmm. What's the first question they should ask themselves before they move forward?
The first thing they should do is get with their financial advisor, call the insurance carrier, and just ask to see a policy illustration run and look at what your current cash surrender value is. Every policy, at least the universal life options, whole life, not term, they have a cash surrender value built up in the policy. So go to your carrier, ask for what that is, and look at it and decide, do we want to liquidate our policy for the carrier's amount? Or, hey, I've heard about this life settlement option. We've got buyers out there that will appraise my policy. Well, maybe we should look at their option. So it's really all it comes down to. It's looking down at a policy illustration that says, well, hey, here's what your future premiums are going to be for the next 5, 10, 15, 20 years, which can go up, by the way. Here's your cash surrender value. Do you want to keep it or not? It's really all that goes into it.
And are there any red flags or common things that they should look out for? There's so much stuff out there these days, people telling people what to do on social media. How do they know what's real, what's not?
Yeah, that's a good question. I don't pay attention to social media, although I guess I'm on it. I get calls all the time. People say, I saw your YouTube ad or whatever. I'm like, okay, great. If you're curious about this business and you're not quite sure, do I look into it? How do I look into it? One of the main sources I always refer people to is Lisa, www.lisa.org. That is our industry association. I belong to it as a broker. My partner, Rob Haney, is a board member on it. But what is it? It'll give you every piece of information you want on the life settlement transaction. It'll give you the buyers in my industry. It'll give you the brokers in my industry. It'll give you the service entities in my industry. It'll give you enough information to go, okay, let's look into this. Or pick up the phone, call me. I never pressure anyone. And that's what the only red flag, as you said, if you're being pressured into taking an offer, move on. There's no buyer out there. There's no broker out there that should put any pressure on a client when they extend the offer. It's a period of waiting, and it's typically a couple of weeks. Once that offer's been extended, we sit back as a broker. So do the buyers. They sit back and say, okay, let's see if the client wants the offer or not. But if you're being pressured to say, hey, take my offer right now or leave it, move on. Go call somebody else. That would be the only red flag. I've only seen that happen a couple of times. I think my industry is very grown up nowadays. I think the players that are in it, whether you're a life settlement broker or whether you're a provider, are very, very good, upstanding companies. So I don't see a lot of red flags anymore. But if anyone's putting pressure on you to accept an offer, go look at Lisa, again, w.lisa.org, and look around at other brokers. If you're in this industry and you are a serious buyer, broker, you belong to Lisa, in my opinion, because our industry, we're there for one reason: to take care of our consumers. Far too often consumers are not made aware of this option, and we're simply an educational resource. Lisa is, so am I, to make sure clients understand that they have this option. Whether or not they want to move forward with the option once the offer's been given, that's up to them. But again, if you've been pressured, move on.
Makes sense. Okay. Tell us who needs to find you.
Sure. Anybody that's 65 and older that's sitting down, looking at their insurance policy, deciding, do I still need my insurance? If somewhere in the back of your head or the front of your head, you're deciding, boy, I've owned my insurance, whether it's a universal life or convertible term. Again, those are 90% of our sales. We don't get involved in a lot of whole life transactions. So again, if you own a universal life or convertible term and you're kind of deciding, do I need my insurance anymore? Sit down with your family, sit down with your beneficiaries, talk to them first. Tell them, don't know if I can afford it. Don't know if we even want it anymore. Do you guys have any suggestions? Well, this is just one suggestion that I hope gets brought to the table. Again, this is a free, non-binding appraisal of your policy. That's it. Nothing more, nothing less. We're going to come back with an offer to you. You're either going to like the offer to sell it or not. It's really that simple.
And how can they find you?
Sure. My firm, Life Insurance Settlements, Inc. My name, Mark Mrky. My cell phone. You want to reach me? I don't care if it's 6 a.m. or 10 p.m. You can always reach me on my cell phone at 954-326-9378. My website, www.lisettlements.com. You'll find as much information as you want. And if you're simply wanting to, what I'll call dip your toe in the water without getting a sales pitch or whatever it is, send me an email. I'll send you factual third-party information and you'll make up your mind after that. And if you're interested, get engaged with us, which is nothing more than filling out an application, allowing me to go to work. It's about a 30-day period for a life settlement offer to get put together. What's going on in that time frame? Again, you fill out an application, you fill out a HIPAA, allows me to collect medical records, allows me to get policy information on your policy, which is then sent to all the buyers in the industry. And again, a bidding process takes shape until you have one last buyer. That's the offer that extended. And then you either say, yeah, Mark, that makes sense. Let's sell my policy, or not.
Well, thanks so much, Mark. I really appreciate you sharing your knowledge and expertise with us today.
Sure.
Yeah. All right. So I have one closing nugget for everyone listening. Thanks for listening to the end. Before surrendering any financial product, ask yourself the question, is there value here I haven't explored yet? Thanks so much for joining us.
Thank you, Linda.
Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagriz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. It helps more people find these conversations. This show is hosted and produced by Linda Grizely Ventures, LLC. Linda Grizely, that's me, is an investment advisor representative of Nectarine, an SEC-registered investment advisor. Linda Grizely Ventures, LLC is separate and unaffiliated with Nectarine. The views expressed on this show are those of the individuals expressing them and do not necessarily reflect the views of Linda Grizely Ventures, LLC, or Nectarine. Guests on the podcast may express opinions or discuss financial strategies that are their own and should not be considered recommendations or personalized financial advice. This podcast is provided for informational, educational, and entertainment purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any securities or other products. Listeners should consult their own financial, legal, or tax professionals regarding their specific situation. Please visit hellonectarine.com and lindagriz.com for all relevant disclosures.